take us through, first of all, why this would be a good year for ETFs?
Well, I mean, every year is pretty much a good year because you can use them for all sorts of things. But for this particular year, what we've noticed is every third year in the past 10 years is one of these flat sort of hangover years. The last 2 years, 56%. This year looks a lot like 2011. Preceding that year, markets were up 45% in the past 2 years. And in 2011, the ETFs that did the best are the ones doing the best this year. One of those is the iShares 20-plus year Treasury Bond ETF. Probably the most boring ETF out there, but in these kind of years, people love it.
I'm not sure if it is the most boring ETF.
I don't know. Long-dated treasuries, it's right up there. But anyway,
yeah.
It's also a very plain vanilla ETF. But, you know, if you look at this, it's underrated. I mean, this thing is a pure natural diversifier. No VIX, no leverage. And this year, it's up 11%. In 2011, it went up 33%. So, you know, these things really do shine in these years. It's taken in $1.8 billion, which is more than the last 10 years of flows in it combined. So that tells me investors are very concerned about this year.
And boring is beautiful is kind of your theme for today. PowerShares S&P 500 low volatility ETF. That sure is pretty boring.
It is. On the equity side, that's probably
in a cool way. In a cool way. In a smart beta way.
It's definitely one of the ones that is for the faint of heart. All it does is take the 100 least volatile stocks in the S&P 500 and weight them inversely to their volatility. So you get like big companies like Walmart, McDonald's, right? This thing has less volatility, and in a year like this, it's up 5%. Market's up 2%. So typically, this is the kind of ETF that will have limited upside, though. So last year in the bull market was only up 20%. But for some investors, that giving up that is worth the volatility, and in a market like this one will succeed.
Let me put a fundamental question to you that a lot of people who haven't invested in ETFs will be wondering. We're going to talk about the Spider Select Sectors Utilities ETF, and people think of dividends when they think of utilities. Do they get a dividend play with this?
Absolutely. It's yielding 3.5%, and that's why you've seen $1.8 billion flood into this. It's the sector that's taken in the most money on a percentage basis this year. Utilities also did great in 2011. This was up 20%, and this year it's up 13%. So again, back to 2011, in these kind of years where there's uncertainty, people want to go get yield, and again, they get paid to wait for rates to rise.